The following content is a technical analysis on Agora Incorporation, a company of the technology sector in software application here off the daily interval. And this is really undeniably one of the most captivating, fascinating advancements spanning across the multiple interval realm that I've come across in quite a long time. With numerous instances of bullish sentiment across the charts. Again, it's worth noting that the majority of my trades are technically influenced by significant downward moves to the short trade setup. Given this current scenario in this stock, there is absolutely no way in hell I would consider taking a short position up in this stock. Now, I know there's a whole lot of mess, a very messy chart with multiple primary reactionary high downtrend lines right across the board. So I'm going to take you out to the drawing board here. And really what we have here, we have a pretty clean, well-defined primary reactionary high downtrend line with multiple reactionary highs here off the February reactionary highs of 2023 at the beginning there. And that's a nice clean primary downtrend line. We do have confirmed already with the confirmed divergent low with bullish and positive divergences that have continued to construct and establish themselves here since March on all three technical momentum indicators with a green candle close line hill churning to the upside here in the oscillator histogram. Oh, very bullish sentiment there. You have the 50-day moving average hovering up above, call it a technical triple line of resistance with this 315 price resistance right up above there. That is a major resistance there. Call it gap support, cuts through multiple gaps. It's a big key level there. So long traders, bull traders, they want to see a solid breakout candle close right up above that level, issuing a buy signal. I have a pretty well-defined hidden primary reactionary high downtrend line, cuts through a couple gaps. Again, just a massive amount of reactionary lows, reactionary highs, multitude all across the board there. That is a big level. In my opinion, again, we've caught some pretty big reactionary high concealed primary downtrend lines in Palantir, AMC, a lot of my previous videos of noteworthy. If they're ever broken above or broken down below, they usually have a very strong wave of selling or wave of buying in each direction. That's how powerful they could become. But what I have here too is this another reactionary primary high trend line off the May 2022 highs there, and that is a pretty big key level in my opinion. Whereas you have not only a taking out on a popped version above the 200-day moving average, but a neckline for a potential prolonged head and shoulder classic looking bottom right up amongst this inflection point. Pretty concealed too, but again, it gives me that inverse head and shoulder bottom looking fill. So if we could take that out, that would be a neckline coinciding with the 376 price resistance as well. So again, big key level right there for any bull traders and or long traders that they want to take out. If you take out this level, you take out that 315 price resistance, triple line inflection point, you're going to spur renewed health in the moving average convergence oscillator histogram all across the board, taking out their zero line thresholds for a much healthier indication of renewed sentiment in these technical momentum indicators there. Even more of a significant development that I have witnessed in a technical aspect of the charts, even more exciting to know, is you have a decent volume price indication around this range as well. But we'll zoom out to the much larger intervals, which are the much larger picture to the entire trade here. And they are the monthly and weekly intervals. And again, like I always like to mention in my previous videos, the longer term, much larger intervals usually overpower the near term intervals. And this is what we have here. We have a stock that has crashed horribly at a 98% crash off its highs there. That is a massive crash right off that 2021, I believe, right among that key inflection point where you had Powell raising rates at the fastest pace in history. And here we are. We have a nice clean. This is one of the most well-defined, aesthetically pleasing, three inside up bullish continuation pattern there. That is as great as a bullish continuation pattern as you can possibly get there. And it's been nothing but consolidation since here. Ever since that truly marked the bottom there. It marked the bottom where you had a potential double bottoming effect there previously off of May 2023. But that is you can be used as a magnet for a move to the upside, and a higher probability formation of a candlestick pattern. And then we'll zoom in down to the weekly intervals here, where you have a nice clean bullish engulfing candle here. Talk about a rally off the double bottom low there. That's 33% in gains, overarching all previous candles in between. That is just a complete engulfing candlestick continuation pattern there, where you had a 21% drop. And again, for the last few 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks. Within those last 12 weeks, you had a candlestick pattern that engulfed the previous 12, 13 weeks there. 33% here. You had a candlestick, 28%. Again, that is a long period of time where you had such a candlestick move of that magnitude, jolt to the upside there, and what I like to call a defibrillator to the heart. And there is nothing that shows previously how powerful that a move in a candlestick pattern of that sentiment could really take the rest of this stock here to the upside. So we'll see what happens as far as anything. Again, bull traders, long traders, they want to see a complete breakout once this daily candle close right above that 315 price resistance, issuing a buy signal. And I would only suspect a very large panic short covering, buying back the stock to cover short traders and bear traders before it disintegrates some of their position size.